Hey, folks, welcome back to the Taylor Tax Show, the podcast for highly paid, highly taxed, high profile, high net worth, and or ultra high net worth taxpayers who want to save a bunch on your taxes legally and perennially, meaning every year. I'm Terrence Taylor, the co-founder of Taylor Tax. I'm an enrolled agent, and this is my partner, Big Al Darnell Jr. Say what's up, Big Al.
What's going on, everybody?
Yeah, Big Al's also an enrolled agent. And today we want to talk about Kamala Harris and her husband, dog Emhoff, and their tax returns. So, Big Al, first of all, let's just give a shout out to @money_cruncher on Twitter for this idea, Twitter X for this idea, because he went through and found 20 years worth of Kamala Harris's tax returns, even before she got married to Doug. And he did a fantastic job for those who want to go to X and look that up of basically analyzing a tax return. So that gave us the idea. And we said, well, let's actually focus it on just 2023 and let's see what lessons we can learn for our audience from looking at her tax returns. So Big Al, let me hand over to you and see what you want to share at this stage.
Hey, what's going on? So, no, thanks for bringing that up. And you actually brought it to my attention. Yes. So big shout out to the Money Cruncher for posting their very summary analysis of the 20 years tax returns. I also found a Forbes article that kind of touched on Vice President Kamala Harris releasing 20 years of her personal tax returns, stretching, to the very earliest days of her political career. Mm-hmm. And so I'm saying all this to say that most people can't just look up anybody's individual tax returns. Those are private affairs, private information. So, but because they are she is a public servant, her and the President Joe Biden, they have made, or they have to make at least their tax returns while they're in public office available to the public. So in this podcast, we're going to be kind of going back and forth with some of the personal tax returns that released over the past 20 years and some of the ones that you can look up and get on whitehouse.gov. But yeah, so that's the first thing is just the availability of it and why we're able to kind of go through this with you right now. Now let me ask you this though, Terrence.
Go for it.
If you knew that your tax returns were going to be made public to the entire world, all right? Mm-hmm. And this is kind of different from what we usually try to advise clients on. How would you personally try to order your affairs in order to make sure that you looked on the straight and narrow and not trying to? Do you follow what I'm saying? Like how would you go about it?
I follow Big Al. First of all, I love that you almost just broke out into the robot. Second thing is, we would advise our clients, look, your tax affairs are your private tax affairs, but as and when you become a public figure, you've already covered this. Some public figures do choose to make their tax returns public. Like we know there's a particular public figure who actually fought to keep his tax affairs.
Yeah. Sure. Donnie T. Yeah.
Donnie T definitely fought that, right? So and I appreciate where he's coming from. So to answer your question directly, I would want to have my tax affairs structured in such a way that I share with the public what I need to disclose, but I also want to keep private, whatever private, if that makes sense. So I guess I'm trying to have my cake and eat it too, right? So I'm really thinking about setting up structures and entities in ways that keep as much of my information as private as possible. And I know we talked a little bit about this, Big Al, so maybe you can come in here and talk about what would you do if it was you? How would you structure your tax affairs so you disclose what 100, you need to keep stuff private?
100%. Yeah, I would try to make sure that, especially in this position, one of the highest positions in the world that you could apply for and interview for and get is as the president and vice president of the United States of America. So at all costs, I would make sure that on paper, just like people do with their resumes, just like they do with their LinkedIn profiles, at all costs, I would make sure to present something that would avoid all appearances of impropriety and make sure that my numbers are just as clean, crisp, clear, and amenable to the public as possible. And guess what's not amenable to the public? You making millions of dollars. You having tons of passive income. You showing, multiple K1s and businesses flowing into your tax return and maneuvering and escapading around the Internal Revenue Code. So because you and I, we both kind of reviewed Kamala's tax returns, especially the ones that were available on the whitehouse.gov the last 4 years, as well as the last 20, but we didn't have every single page to review as quickly. But everything looks pretty cookie cutter, pretty cut and dry, pretty basic. Hey, there's 2 incomes, a dual income household, no dependents. Kamala's got a writing business where I think in 2023 grossed $7,000 and some change and netted $6,000 or right under $6,000. But in 2018, I believe she made like $750,000 in that same writing business. So why does it make 1% of what it made 6 years ago when 6 years ago she was not vice president? And this year or in 2023, she was? Is that ringing any bells? Now, here's the thing. I'm not trying to blow up her spot or anything. I'm just relaying this as a form of analysis because numbers tell a story. Numbers always tell a story, and tax returns tell that story. And this is why I try to relay to taxpayers, our clients, so on and so forth, is that whenever the story starts to get distorted or starts to get a little cloudy, that's when the IRS might try to do a little bit more digging. Now, once again, it doesn't look like she's saving tons on taxes from this standpoint. So there's probably not going to be that much digging going on. But whenever you have huge changes in income or expenses and write-offs, that's where it comes in. So yeah, I would definitely present it clean and cut. So now how do you do that? How do you maintain this vast array and network of financial activity and yet still present a run-of-the-mill, and by the way, this is not a average income household. Together they made over $400 or close to $400,000. So by no stretch of the imagination am I saying, oh, this is a small amount or the average American amount. I believe the average household brings in, I don't know, let me not misquote it, but it's under $100,000, I believe.
Well, if I may just jump in here, they're in the target market for our podcast, so they're highly paid, right?
100%.
Yeah, but so what's fascinating for me, I'm just conjecturing here. In 2023, it was like $395K and some change, I believe. Yeah. And Joe Biden has been very eloquent that he ain't going to be trying to tax people above below 400,000.
That's right. That's exactly right. That's exactly right.
I just wonder, like, did Kamala have any influence on Joe when it came to that? But I interrupted you. Please keep going.
Not a problem. And no, I don't think that Kamala had any undue influence, because their income, Joe Biden and his wife's income, is probably right around that $400K, $400,000 to $500,000. But anyway, so going back to that question that you're asking about how would I present, because I posed it to you and you threw it back at me, Uno reverse situation. How I would do it is this: I would make hers look just like it does. Baker Tilly LLP is the firm that she used to prepare her returns. Great firm, so on and so forth. Great job. But this is what I would do to kind of, it's going to sound terrible because I can't think of anything else right now. And I did watch that, Deadpool Wolverine and Deadpool. Deadpool and Wolverine movie. Yeah. So I'm thinking in like super villain terms. But yeah, so you could create shadow structures, all right? And not saying shadow structures in a bad way, but like she could have a C corporation, all right? And with a C corporation, as we both know, that is a completely separate entity with its own EIN, which is akin to a social security number before a corporation. And it has its own...
employer identification number, EIN, for folks.
Thank you so much. So that can have its own income and expenses, and the money can stay within it. All right. So what could happen is uh, a lot of their income, a lot of their extracurricular financial activities, not saying that these are wrong ones, but a lot of that could be running through
All
a
legal.
series. Yeah,
Yeah.
100%. A
Yeah.
series of C corporations, but then they can also have them in trusts too. There's different ways that you could structure and set up trusts so that these trusts operate independently. So you could have C corporations that are operating as holding companies. You can have trusts that operate as the I guess the endpoint or where money ports to or flows to. And then you can have other structures that pay for a lot of the other aspects of your lifestyle. Because think about this, we had talked about Grant Cardone. I'm not sure if we talked about him on a podcast, but I know we've talked about him in passing, about him writing off that $15 million jet.
Oh yeah.
Do you think do you think that $15 million jet is on his tax return and being depreciated on his personal income taxes?
That's the good question, because the way he tells the story, I had the privilege of in December 2022 going. No, it was his real estate summit. I stand correct. His real estate summit. So the way he tells the story is he needed to figure out a way not to legally pay taxes that he had coming due. So he was looking at what's available to him in terms of deductions. And as a businessman, successful businessman, he was talking to his tax accountant and potential advisor. I wasn't sure if it was one or the other, but they couldn't really come up with something. So he asked the question of like, well, since I need to the number is not as important as the concept, but let's just make up a number. Since I need to basically find something that allows me to write off up to $2 million in taxes, what if I buy a jet?
Yeah.
And the tax code allowed him to buy a jet, put it into service, which is the term that's used by the IRS.
Yeah.
By the end of the year, by December 31st of that tax year, and then he got the deduction for that particular asset, right? So that's the way he tells the story. So yeah, just a little background on that. But back to what you were saying, Big Al.
No, that makes sense, and I didn't even think about it like that either, about how it flowed through. But I personally believe it's probably some sort of flow through situation.
Could have been.
Because
could have been business.
If it was,
right?
Yeah, if it was on his personal taxes as a personal asset, then he couldn't write it off. So it had to be.
I think it was a business thing, right? So he had this expense for the business, and he was trying to figure out how to do that in the business. So I guess to your point, it's not so much a flow through story; it's more a story of understanding that these assets that are useful and are depreciable, or can be depreciated, are assets that can help to save taxes both on your business taxes as well as your personal taxes. But let's come back to the point you're making about the flow through for Kamala Harris and Doug Emhoff.
So what I was saying is that there are structures that could be created,
right,
to visually safeguard, their tax return from reporting additional income.
Right.
Because I didn't even think about it 100%. I didn't even think about it until I was mentioning it or railing over what I'm seeing here. There's a beautiful situation, nothing wrong. I'm just saying that, how did you go from making $750K in your small business
in your writing
6 years
business
ago, and now you're in a much more elevated position? Back then, a lot of people in California knew who she was.
Yeah.
Other people that are political, people knew who she was, of course. But when you become VP, and I'm pretty sure she started campaigning for the presidency back in 2019. So this is all before she got on the public national or international stage.
Yeah, the national stage,
Yeah, but then your book sales go down. As a matter of fact, Obama's, it was almost the opposite. He wrote a couple of books as he was getting closer, and then when he became president, that's when it blew up. So his book sales goes up, hers goes down. Makes me think that there might be other things going on, or maybe she just quit writing. It's
I was going to say, look, maybe it's Occam's razor. The simplest explanation is maybe she just quit writing, or Big Al, or she was advised on how to structure her tax affairs.
Yeah.
So she paid the minimum taxes, because one of the things that we picked up is with that 395, and as a couple married filing jointly, they were in the 25% tax bracket, which then led to them paying, I think, slightly less than, or having less than 67,000 withheld from their income, right?
Yeah.
And I shared this with you, and I would like for us to bring this to a close for our audience. In terms of making this topical for them, I shared this with you that as I looked through their tax return, I actually thought to myself, like, clearly they don't have tax advisors, because I don't see a lot of deductions, and I don't see a lot of things that we would naturally advise people to think about at that tax bracket to pay even less in taxes. And you brought up an interesting point about the fact that, look, she's a public figure. So I want you to make that point, and then I want us to bring it home in terms of like the lessons for our audience from looking at Kamala Harris and Doug Emhoff's tax returns, and just some takeaways, and then we'll wrap.
Cool. But yes, so with her being a public figure, she needs to present very clean, concise, clear, non-exuberant financial tax returns. And I believe that this is presented very well. I'm not trying to indict any of their activity, saying that, hey, they have to have something going on. But as we would advise, we would definitely advise her to have something going on in a structure that was harder to view into. The other thing I wanted to mention is, I know in 2023 they got $50K in interest income. So if the interest is boiling at 5%, that means there's $1 billion sitting around in these Wells Fargo accounts that are generating that, which is a beautiful thing. Because from an aspect of our implementation, I just figured it out, man. Think about this. We talk about the buy, borrow, die strategy, right?
Yes, of course.
All right. And one of the biggest things that we relay to a lot of our clients on living a tax-free lifestyle is making sure that you generate and you build up your assets in a way that you could do what from the equity in your assets, Terrence?
Borrow against the equity.
Exactly. So now let's just say if they got a casual mill or 2 mil, because I'm not a lot of the companies.
Because, not to interrupt you, but Doug used to be a partner, and he used to bring in over $1 million, right?
Every year.
From what we can tell, he teaches at Georgetown, and that's where his income is coming in. But go ahead.
Correct. So if they've got a casual mill just sitting in a couple of accounts generating that type of interest, guess what they could do? They can take a loan against that $1 million. If they have a separate corporation or entities that have millions of dollars stored in them, they can be like, hey, guess what? Just for 4 years, let's go ahead and pull out, take loans on all the other assets that we have. We're not going to sell anything, and we can live off of that as well. But that's the other thing. And there was one other point I wanted to make before closing, but I can't think. That's it. The strategy. One tax strategy I would advise from what I've seen, because I believe they had a jump, or in 2018, they, I think that's when the Tax Cuts and Jobs Act was restricted. The first year they restricted the SALT limitation.
The state and local taxes deduction. Yeah. Correct.
Thanks for everybody knows what SALT means. Yeah.
We hope.
Yeah. So it's but by doing that, they were unable to write off about $225,000 worth of state and local taxes that they paid that year. They were only able to write off $10,000. So now, so let's say they couldn't write off $250,000, and they were only able to write off $10,000. So now that's a $240,000 that they would usually have been able to write off, now unavailable. So that made them miss out on about $80,000 in taxes. So what I would suggest now, the statute of limitations, of course, is over because that was 6 years ago. Yeah. But what I would suggest is the pass-through entity tax election, PTET. And with the pass-through entity tax election, kind of what you were going with having an S corporation that you had mentioned. I'm not sure if it was on the podcast or in our conversation before. She could pay, or they could pay, a large portion of that $250,000 through their S corporation to the state of California in order to receive that write-off that could then be used as a write-off on their as a pass-through write-off on their federal tax return. So that's what I would suggest in hopes to get them a larger refund. But yeah, it's pretty much all I got to say about that, man.
Hey, Big Al, we had a lot to say on this. So here's what I will close out. Folks, the situation of being a taxpayer who's right around that 400K tax bracket requires you to master the tax code, right?
Yeah.
And the tax code is like a cheat code for how you structure your affairs. So you pay the minimum amount that you're legally required to pay and no more. So what we picked up is, first of all, it looks like there wasn't the first thing that we would have recommended, which is the buy, borrow, die strategies principle of understanding that the tax code says that when you have income, the more you make, the more they will take, the more it's taxed. If you are able to structure yourself so you have assets that you can lever and borrow against, then any debt from those assets, right, from those borrowings is not considered income, so it's not taxable. So that's the first thing. The second thing is we've spent some time talking about strategies and levers that the tax code allow, and we're going to add a seventh for this conversation. So I'll go through them relatively quickly. So the first one is starting a business, which it seems like she definitely did with her writing business. What we don't see, though, is the use of that business to structure her affairs so she could actually have more deductions and therefore reduce income taxes via that business. Second thing, investing in real estate. I didn't really pick up much in terms of depreciation, Big Al, so I'm not clear that they're using that as a strategy, because investing in real estate, especially in a pass-through situation, if you're highly taxed, allows you to use depreciation, accelerated depreciation, bonus depreciation, and a lot of other expenses to reduce your taxes. We can't really tell from the tax return if they have any insurance policies, but the third thing that they could do is use insurance strategically, because once you have an insurance policy that's seasoned, so you've paid into it 5 to 7 years and it's now classified as an insurance policy by the IRS, it allows you to be able to do buy, borrow, die through the insurance policy. And therefore, you can now get policy loans that are tax-free in your hands and very little, if any, restriction on how you use that money. The fourth thing is estate planning. It's not really clear from the tax return if they're doing any of that, but given what we know in terms of what Doug used to make, and given that Vice President Kamala Harris is right on the cusp of potentially becoming president of the United States, we have to believe that their estate is actually going to be sizable. So hopefully they've already started doing estate planning to begin reducing taxes and ensuring that they pass on to the people and causes that they care about what they want to pass on in a tax efficient manner. The fifth thing is strategic gift giving. So we don't have any sense from the tax return if they're doing that, but given that they have blended family and probably people that are in the family that they might be helping out, most people who are making that much income tend to be golden children in the sense that other family members always are asking for help, right? So that's one way that they could handle that. And even when it comes to strategic gift giving, we can't pick up whether they have things like the Personal Family Foundation set up. We can't pick up if they have done any donor advised funds, which are really good strategies for saving. In the case of the Personal Family Foundation, getting tax refunds or tax deductions on 30% of the adjusted gross income. In the case of donor advised funds, getting up to 60% of deductions on your adjusted gross income. And then number 6 is if they're making any investments, they could set up a private equity entity to allow them to potentially save 17% on taxes, especially if they have what's known as carried interest, which is the tax rate for that is capped at 20%, right? Capital gains tax rate as opposed to income tax rate. And then last but not least, it's not clear from the tax return if they're doing any type of retirement planning, but certainly retirement planning is one of the ways you could further reduce your taxes. So whether you have, through her writing business, she could have set up another retirement account, many different types. So we won't get into that here, but you get a deduction for that if you structure it properly. And then also, it's actually an area where insurance policies can be really helpful in setting up your retirement savings through an insurance policy to allow you to save even more on taxes and have potentially tax-free retirement. So that's a mouthful, but we just wanted to share that with you. This has been a longer podcast than usual, but we just had so much to say about Kamala Harris and her taxes. So folks, thank you so much for checking us out. If you want to deep dive more into any of these topics that we spoke about, check out Tax Strategies GPT on the OpenAI GPT store. If you want to reach out to us with any questions or thoughts, or you want consultation on your tax situation, you can reach out to Terrence at tailoredtax.ai or Big Al at tailoredtax.ai. All right, folks. See you soon.
All day. Cheers.